Okay, hi everyone. Welcome back to Adair Live. My name is Gabby Gately, and I'm part of the marketing team here at Adair. Today we have really two awesome and very knowledgeable people with us. So Josh and Ryan. Josh and Ryan, do you want to introduce yourselves and explain your roles with Adair?
Sure. Brian, go ahead.
Yeah, thanks, Gabby. Good afternoon, everybody. My name is Ryan Holtkamp. I'm the general manager of the in-house finance company. It's Adair Financial Services. We support Adair homes and have been doing that for the past 20 plus years.
Yeah, thanks, Ryan. And Josh Biggs. I work in sales leadership for Adair. I've been with Adair for 15 years.
Yeah, thank you. And today we're just going to kind of be talking about our new financing promotions that we've been offering throughout October. We have 5 of them. So there's a lot to go over and talk about. And we have very knowledgeable people here today to talk about them. So if you have any questions throughout this entire time, whether it be about the financing promotions or building, you can ask them at any time, and we will be looking at the chat throughout the whole thing. So just to start us off, kind of our biggest one, Josh and Ryan, will you talk about our kind of stay in your home rate promotion? That's kind of our biggest one we're running right now.
Sure. Yeah, I'll jump in first. And the Stay in Your Home loan program, and I'll have Ryan can dig into the details of it. However, the Stay in Your Home program is really built for people who, customers who own their home and want to stay in their home until their home is complete, until their construction, they want to build a home until their construction home is completed, and then they plan on selling the home once the Adair home is completed. And what this loan allows for is for a customer to have no closing costs on the construction loan and pay no payments during construction. So it allows for someone to stay in their home, not have to worry about any payments on a construction loan, and until their home is completed. And then, towards the end of construction, they sell their house, and then that home is allows the to go into a permanent construction loan at the end. So, but it's really around creating that opportunity for those customers, for those of you out there who have thought about building, wanted to build, but that was a reason to kind of to hold back and not actually build. And there's a few other elements of that too. Ryan, do you want to share a little more details?
Yeah, will, Josh. Yeah, it's really for the customer that, like you said, Josh, that wants to stay in their home while the Adair home is being built, but also needs that equity out of their primary home for their construction loan. But again, they need to stay in their home. They don't have anywhere else to live. So we have a solution for that where we'll basically, like Josh said, look at that equity in your primary home. For instance, let's say you qualify for a $500,000 construction loan, but you need $700,000, and there's $200,000 sitting in equity in your primary home. Typically, what you'd have to do is sell that before you'd get that cash and bring it into closing on your construction loan. What we've done, we're allowing customers to stay in their home, and then we'll pull that equity out of your home when you sell it after the Adair home is built. So what that does is that solves the issue of most customers don't understand or can't find somewhere else to live while their Adair home is being built, and don't want to live temporarily, in an apartment or something, want to stay in their own home. So this gives customers opportunity to stay in their home. We'll pay the closing costs, we'll pay their interest on the construction loan. And when the home is built and completed, that house is sold, that money comes into the construction loan, and you're good to go. So yeah, it's really a program for customers. It bridges the gap between where we need to live while the Adair home is being built. And it's just more comfortable. You're not moving twice, basically, is what's happening. And that really is something that is very popular with our customers right now.
Yeah, and a few things that I think are real highlights is one of the things you said is that, so if someone needs the equity in their home, their current home, to qualify for the construction loan, like the example you gave, if say someone gets pre-approved for 500,000, but they need 700,000 to build their house. They, as long as they have $200,000 in equity, we're able to give a construction loan for the $700,000. And then when the home's completed and then the home's sold, then that equity pays down the loan, and the final loan will be 500,000. But it allows someone to qualify for the entire amount that they wouldn't have qualified otherwise had they not sold their home previously and had the equity. So that's one thing that is really helpful. The other aspect of it is that we have many customers who need to pay down debt and to qualify. Ryan, can you talk a little bit about that and how that fits into this loan program?
Sure. Yeah, same kind of scenario. So if there's, I'll use the same example of the 500,000. If there's debt that needs to be paid off, and we can qualify, and with paying that off can qualify you for a higher construction loan, it basically works the same way. We can pay that off at closing to help you qualify. You still sell your house at the end, but that is completely another option to keep your debt to income ratios intact by paying off debt. So yeah, that's a huge win as well, Josh. The other one, just to talk about too, is, and I mentioned it, is the interest and how Adair covers your construction interest. So on a construction loan, as you draw funds out, that builds interest, and every month typically you're paying interest only payments, and it works like a line of credit or a credit card. As you draw funds, that number increases. Well, Adair is going to pay your interest as well during the 12-month construction term, so you can stay in your home. We'll cover the closing costs. We'll cover your interest during the build. So now you're only paying your current mortgage payment. You're not paying the interest. So that's a huge dollar savings as well, on top of the option if we wanted to pay off some debt as well. So there's just a lot of different ways that can go, but we've kind of thought about everything to help customers stay in their homes and build with us and be more comfortable doing it and not financially stretch them.
Yeah, I think the idea of not having to pay 2 mortgage payments during construction is really attractive. So, so great program. Gabby, turn back over to you.
Yeah, I was going to ask some very simple questions that maybe people might have. I don't know a whole bunch about financing, so maybe people also have questions. But I know on our website, the Stay in Your Home one, it says there is no down payment. So is there just no down payment at all, or are people paying that later in the time, or does that kind of go in as like what Adair is paying?
Yeah, so if with that program, so the equity in someone's home that they're currently in, it can acts as the down payment on the construction loan. So without even pulling out the equity, we just because that money is going to get paid when the home is sold. So it's a way for somebody to that would have had to bring in, say, $100,000 to closing, not have to bring that money into closing, and we'll still fund the construction loan, still build the house, and then we just get that, we capture that $100,000 when that home is sold later. And so a customer doesn't have to bring in that money.
Okay, perfect. Makes a lot of sense. I think that was kind of the main question I had for that one. But we can move on to the conventional loan that we have. And I think I was actually going to pull up our website as well, just so people can see the outlines as well of what we have on our website. So if you go on our website, you can see all of our promotions right on the front screen. So you can just take a look at all of them, but I'll leave them up as well as we're going through them.
Yeah. And you can see, if you go back, Abby, we have a number of different programs. And the reason for that, we found that there's many customers that are in different situations that need different programs to help them find a way to build a home, whether that's the Stay in Your Home program that we just spoke about, whether that's a customer who has VA, that's a veteran, and we can use a VA construction loan at a lower rate or FHA, which is more first-time home buyers and a lot of lower down payment or credit score customers. And then we have our conventional loans as well, which are traditionally what we've done. So we have different programs for different customers, and one of the benefits of in part of our process is inquiring with us, getting in contact with our team and our loan officers, and being able to talk about what scenario, what situation works best for the customer based off their needs. And there's lots of options at their disposal. We've had a number of different promotions over the last year, and we've helped hundreds and hundreds of customers, and we've just find it to be really valuable to have these different options. And so, to your point, you asked a question, Gabby, about the conventional program, and to kind of go into that, and I'll Ryan, do you want to touch on that program?
Yeah, I will, Josh. Thanks. So yeah, the conventional loan program is your typical your Fannie Mae or your Freddie Mac, your typical conventional one close construction loan, and that's as low as 4.875. And these rates are 30-year fixed. In with this program, with all our programs, if you own the land and there's equity in the land, you could possibly have a zero down payment as well and still get that 4.875 payment. If you're purchasing land with the construction loan, yep, you can still get that lower rate. It is going to require on a conventional loan a minimum 5% down if you need to acquire the land with the construction loan. But yeah, as far as interest rates and where they're heading right now, we're still on construction loans. If you look at the market out there, we're still right around the 7% range, and we're offering that incentive considerably lower. So the payment savings as well is massive depending on the loan amount. We're seeing with my team, we're seeing payment savings, $500, $600+ a month, depending on the loan amount. So really good promotion to keep mortgage payments lower for customers. And on top of that, it helps customers qualify for a higher budget as well with that lower interest rate.
And then with the loans, I know it says it's a $550,000 loan on here. Can the loans go higher and lower than that, or is this just kind of like a general one we added on the website?
Good question, Gabby. So yeah, that is just a example. Right now, as we sit now, the conforming loan limit is $766,550, but that is going up. Every year it tends to go up, and right now we're pre-qualifying customers conventional up to $803,000. We suspect when the new loan limits come out, they'll probably be closer to $810,000, and they can go all the way down to under $200,000 too, Gabby. There's the max limit is going to be the max conforming loan limit, which should probably fall about $810,000 this next year. And we're already pre-qualifying customers at that higher loan limit.
Yeah, that's a good point. And I would say that to add is that the conventional loan amount, I think we're qualifying people up to 805, or is it 810 right now, Ryan?
Well, we're actually qualifying them, Josh, up to 803,500. That's what the other lenders have started doing. So we're following their lead. But like I said, that should go up here in the next couple months when they're announced the official limits.
Yeah. So then when customers have loan amounts that go above 800,000, it gets into jumbo loan territory, and we don't have a slide in or this on our agenda topic to go in depth, but we do have programs that go above 800,000 up to 3 million. I believe, is that correct, Ryan?
Yep, that's right. Yep.
And even we're able to get we have promotional programs for those jumbo loans as well, and rates can be as low as, Ryan.
We're basically right now in the high fives, low sixes on a true jumbo one close construction loan.
Right. So customers that are $1.5, $2 million loans, and we see those that come through, and we still have a far below market rate on jumbo loans available for those customers too.
Right.
Perfect. Can go on to, let's see, our VA construction loans. Those are pretty nice.
Sure. Yeah, I can go through that, Gabby. So yeah, this is exciting. We have for veterans, we've got an incentive where we've rolled out. It's at 3.875, and that is a 30-year fixed, and that's zero down. I mean, that's your traditional VA loan. Everything can be included in that, from your home to your land, to your site prep, to all of that. And as you see there, that is another example of 550. That's just an example. The beauty of VA is there's no loan limits. It's based on the veteran's entitlement, and what that is on the COE. So we can take them above the conforming loan limit as long as the eligibility required or accepts it. But yeah, 3.875, and as the veterans know, it's zero down, and there's no monthly mortgage insurance. And on top of that, if there's a disability or there's a disabled vet, there's no funding fee either. That is waived as well. So a really, really attractive program.
Right. Yeah. And just as a note too on VAs, that there's no payments made during construction on a VA loan. Those the costs for the VA for those payments are included in the VA loan. That's a requirement of the VA program, and actually a really great highlight of that too. So no payments during construction on VA. Right. And for that, we have in the markets that we're very fortunate to serve, there's so many active and retired veterans and across these markets. So it's exciting for us to be able to offer a program like this.
Yeah, it's very nice. Let's see. I think we have 2 more left. So if any of you have any questions at all, you can just put them in the chat and we'll answer them throughout our time here. But we can go on to, let's see, our 4th promo, which is this FHA construction loans. If either one of you two want to start about that.
Yeah, I can talk about that. So same 30-year fixed rate, 3.875. FHA is a little bit different. So FHA has a few caveats to it. It's really built for, it allows for higher debt to income ratios, and it allows for lower credit scores as well, and a leaner credit depth. It's not as intensive as your conventional loans looking at your credit scenario. So it's more flexible. And same thing with, if you own the land, possible no down payment. If you're purchasing the land, that is a 3.5% down payment, only 3.5%. FHA does require that you pay the interest during the build, dissimilar to VA. But again, this is really for a lot of first-time home buyers that have minimal down payments. They don't own land. This is a good option for them at 3.5% down. The FHA does have county loan limits, not state, but every county has a specific loan limit. The lowest loan limit right now is around 490, and then it goes all the way up from there. Now with conventional, FHA will raise their limits again this year, and those usually hit in November. So we'll see an increase in that lower level loan limit as well, which will be helpful. But again, this is just a really good program for first-time home buyers that may not have a ton of credit. They have the income, or maybe their debt-to-income ratios are a little high. This program is a lot more flexible and will allow a lot more first-time home buyers into our program.
Perfect. And then lastly, we have our first-time home buyers promotion too.
Yeah.
Go ahead, John.
Yeah, I was going to say is that we many of our customers are first-time home buyers, first-time home builders. Also many of our customers that are prior homeowners that they're selling or they've built before. But we're highlighting the first-time home buyer financing, which is we're utilizing FHA or the VA programs for that, for those lower interest rates. But highlighting this because it's oftentimes for a first-time home buyer, they're not really considering building a home. It's a lot of times first-time home buyers are looking at buying existing homes, and but the idea, the benefit, there's such a benefit in buying land and building a home, even if it's if it's a first-time home buyer type home, whether it's a lower price point home that fits into a first-time home buyer's budget, there's such an opportunity. Our average equity position for our customers has been that this last year and last quarter, it's approximately 25%. I think it's a little bit more than that, Ryan, but meaning that when someone comes in and buys land and builds a home, when the appraisal is completed, the appraisal is coming in, and they already have the customer already has equity in their home. And you think about that from a first-time home buyer situation, to be able to walk into your first home and have some equity, it's going to be life-changing for that customer. So it's such a benefit. Our process makes building a home so much easier. We have a site services process where we're navigating the site development and the permitting process, so we can make it very streamlined for someone that doesn't have as much experience, and it's their first home, and we work with a lot of customers that fit that profile. So we really highlighting this as just an opportunity to show that we can help people that they've never owned a home before and may not have considered building a house as their first home. So excited to have this program and developed and to recognize those customers.
Yeah, just real quick, good point, Josh, on the equity piece. So, to break that down for everybody, if you're buying an existing home, the only way that you're going to have equity in it right up front is if you're putting, your 20% down, or whatever you're putting down, you're going to have that equity. The beauty of our product is, we have the costs and everything to build a home, and then the appraisal comes in, and typically what happens is we're seeing that appraised value come in about 25% higher than the true costs of building the home. So on a VA loan, if you're putting zero down, you're going to already walk into a situation where you have equity in the program. So for first-time home buyers that are really looking at buying a home but have limited funds down, this is a great program for them because it offers those lower down payments and the potential of a really good equity position without putting a lot of money down.
That's right.
Yeah. Let's see. I know we have a bunch of awesome promos that we just went over. If someone was coming into maybe our offices or calling for the first time and maybe they don't really know what loan they would maybe qualify best for, are we able to maybe sit down with them and talk through maybe all these options and see which one works best for them?
Yeah, the first step is to go online. You can chat with one of our online sales consultants, or you can call the phone number on the website. There's a form on the website as well, and you can schedule a consultation, and the team will connect you with a representative in your where you're looking to build, in the market you're looking to build, and then also connect you with the loan officer that serves that area. And many customers come in and ask these questions, and that's our goal is to meet with you, share with you our process, share with you the financing options, get that information for you, understand your budget, understand your payments, understand all the information, so you can make a decision of whether or not building a home is right for you and your family.
Yep. Yeah. And just to note real quick, we're more than happy to talk to you about our different promos. And also, if you wanted to apply with us, go to adairfinancial.com. What we do there is we do a soft credit pull. There's no obligation, there's no cost to apply with us. And before we actually send out your pre-qual, we'll reach out to you and kind of go through your application and talk about the various promotions we can offer, put you in the right program, get your pre-qual letter out to you. Then you can work with the sales team at Adair Homes to put together your home plans. But for our purposes on the finance side, it's a very seamless process. Doesn't affect your credit score by applying. You at least know what your max budget can be, and then you can go from there. So I just urge everyone, if there is an interest here, obviously talk to anybody at Adair Homes, but you can also apply, and that'll get you moving to the next steps, and there's no obligation at all after you apply.
That's awesome. Let's see. I don't think I have any more questions, and there doesn't look like to be any questions in the chat. But if anyone is watching this after the live has ended, since it'll be on our YouTube and Facebook page, and if you have any questions, you can still ask them in the comments, and we will answer them to the best of our abilities when we see them. So yeah, if you guys do you have anything else you would like to say about these promos at all?
I just want to just thank everybody for taking the opportunity to watch this live video, and just let us know if there's anything we can do to help.
Agreed. Thanks, everybody. And yeah, just excited to hear from any of you. If there's any questions, please reach out to Adair and Adair Financial. We'll be happy to assist.
Yes. Thank you all for coming on and watching. And then thank you, Josh and Ryan, for also helping me out with this Adair Live and answering all of our questions we have here for the promos. So thank you.